to do in this call is we're going to try to give a very generic market update for the last 1 week, and post that we will open it up for Q&A. Right? Okay. Right. So now, starting with the first one, right? So the current state, right? So the Nifty 50 has dropped 16% from its peak. So again, this doesn't come from the last week. This is basically for the last 4 to 5 months what we have seen, right? Where the market has been on a downward trend. Now, Nomura, their prediction is that there's going to be a future decline of 21,800 by December 2025, right? At the same time, looking at the growth, they also see a potential that the market can increase by 25,700. Now, both these numbers are nifty, where we can see a potential uptrend by the end of this year. Coming to the uh, most debated topic from last month, which is on the small and mid caps, right? So just to give some context, small and mid caps have corrected the most over the last 4 to 5 months, and arguably so, because if you see, small and mid caps are more volatile compared to large cap, right? So if the large cap index falls by 15 to 16%, it is very normal for the small and medium caps to fall even drastically, right? So if I can just put some numbers over here, I think mid cap has fallen by close to 18% and small caps by close to 24% in the last 4 to 5 months. Now, there was one news which came out, was that there was one of the fund managers, if I'm not wrong, from a particular AMC ICICI, where their context, it was whatever that person had mentioned was taken out of context on the small and mid caps, right? But obviously, we do see value in investing in medium and small companies. The now again, not trying to go too much into technical aspect, right? The PE of both small and mid caps have fallen, but this has to be in proportion to the growth aspect as well, right? Looking at it, small and medium cap investments should only be done if your goal is for more than 5 to 7 years. Only then you should consider investing in medium and small caps, because if the volatility continues, small and mid caps are the sector that will get beaten the most. We'll take more questions on this after we've gone through the entire update, but that was a very brief on small and medium caps. Now, coming to the next one is on direct stocks versus mutual funds, right? Now this is a debate again which has been happening for a very long time as to what should one be doing, right? Now, it is I would suggest that when you are investing in direct stocks, right, there are different strategies. One could be doing intraday, one could be doing trading, one could also be holding positions and doing a swing as well, right? So we don't really see direct stock investment that as the first option of investment. We often think that mutual funds is the right way for an individual to start the investment, because it gives a very good base. It gives a very good start to an individual to their investments. Now, I'll not talk about how direct stocks have performed versus mutual fund in the past, but I want to highlight as to how direct stocks are performing at the moment, right? So we just got some data, right, wherein 71 percentage of stocks, right, have fallen by more than 40 percentage in the last 4 to 5 months. There are another 21 percentage of stocks which have fallen by more than 50 percentage as well, right? So now, when you look at this, when you compare this with an index, right, and if I'm talking about large cap index, the market has only corrected by 16 percentage, 14 to 16 percentage, right? So for someone who doesn't who does not have so much of a risk appetite, right? Who cannot see so much losses over a short period of time, right? It definitely doesn't make sense for them to invest more in stocks at this point in time. Be it for swing, be it for intraday, be it for what to say, even long-term positions, right? Now, this again is something which will make sense for retail investors. Now, if an individual says that I have the time, I can put in the effort, I can put in the skill to learn the technical and fundamental of a stock 100%. But most of the retail clients do not have the time to pick stocks by themselves, right? So for which we suggest that mutual funds, starting an investment with mutual fund, or building a good portfolio with mutual funds is the right thing for you. Now coming to the next slide, right? Like we just wanted, I just wanted. This is one point that we had discussed last week as well, and we wanted to highlight this. This is where your asset allocation comes into place as well. We last week on our call we spoke about having a good allocation in gold, right? Because that would be a good hedge to your portfolio. You get good steady returns. Especially if you're investing or have invested in SGBs, right? You get a 2.5% interest yearly, and at the same time gold is something which people understand, right? But at the same time we feel like fixed income securities and alternative investments, right, such as investing in commercial real estate through small and medium real estate investment trust, that is a very good option right now, right? Because equity is going to be volatile this entire year. Equity has been volatile, like there's no debate to that, right? Equities are volatile, but if you see from a long term perspective, if you zoom out and see, right, then yeah, you definitely see equity performing better than all other asset classes. But right now, if we feel that the markets are going to correct more and we don't have the risk appetite for it, we should definitely look to move some of our new investments into a fixed income or an alternative investment category. Right. Now, uh, portfolio management services in US stocks, right? So, over the last couple of months, basically any individual who was investing in US stocks, that could be a NASDAQ 100 or a S&P 500, was doing it through a fund of fund, right? And now, what has happened recently is that we have breached a threshold wherein we cannot invest more money into US stocks, right, through fund of funds. Now, that is kind of a disadvantage because people who were looking to diversify their investments in US cannot do that. This is not the first time that we've seen such an instance. This has happened in the past as well. So this, I feel, is a very temporary thing. Probably in the next 6 months, 1 year, the investment will again start to flow into these US investments. But if you are an individual who has a slightly higher ticket size, right, then we would definitely suggest a PMS in US stocks for your diversification and for you to have some kind of assets in park in the US stocks as well, right? Again, as I'll repeat myself, this is not for someone who's building their mutual fund portfolio, who's starting the investment now. This is for an individual who has an existing allocation and has a slightly bigger ticket size. PMS in Indian stocks have not outperformed mutual funds in the past, and I don't see them doing too well in the future as well. Plus, a very demotivating factor which I see is that the expense ratio is quite high for something which doesn't give you the growth higher than a mutual fund. I definitely don't think it is worth investing in a portfolio management services in India. But if you were to consider making a bigger ticket size in the US market, definitely you should consider this. Right. Now, 2025, like as you can see, right, it is a year of aggregation, right? I honestly feel this year is going to be, again, I would like to be wrong over here, but I feel like this year is a year of aggregation. This year is going to be very average in terms of the returns that you see, right? But you need to understand, and again, I like to highlight that you make money in a falling market, right? So right now is a consolidation phase that we are seeing. So you need to understand this, that for you to see better returns in the future, right, you need to start your investments or you need to continue your investments this year for you to see good potential in the coming years, right? So this is a year of aggregation. It is very important to position yourself, right? Now, I'll just take one example over here of a stock which is HDFC Bank, right? This particular stock everyone knows, right? Like there's so much spoken about this stock, right? Like people understand that this is a very good stock to hold. But in the last 2 years, if you see, right, the stock hasn't moved much, right? That doesn't mean that the stock is bad in fundamentals or the stock is bad with technicals, right? It's just that you need to understand how to position yourself, right? If you feel that this particular stock is good and it is going to give you good returns in the future as well, right, please do not do the mistake of putting 100% of your allocation in one particular stock or at one particular time. Try to move it in intervals, at regular intervals through SIPs or with every dip in the market, right? Try to position yourself accordingly and do not do the mistake of putting all the money in one particular stock at one time, right? That will just create impatience, and you will exit that particular stock or that scheme, and then you will see the rally happen. We've seen this in the past as well. Now, with that, we've covered, the weekly update for the last for the last week. Now I want to open to Q&A. So I like to request the participants who have joined to answer, like if there are any live questions, right? I would like to take that first, and then we can obviously go through some of the questions that we've already. Right. So let's start with the five questions that we have received, which we've shortlisted. I'll start with the first one, which is with Nifty down 16% and prediction of more fall. How should investors plan ahead? Right. So I think that was the last point which we spoke in the slide as well, right? Wherein we mentioned that this is a year to aggregate your positions, right? So I believe an individual who has been investing much before 2024 or even the last 5 months, right? They would have obviously, if they were investing in SIP, they would have consolidated positions over the last 4 to 5 months, right? Where the markets have corrected 16%. So even if there is a upward trend, if there's a downward trend or a sideways trend as well, right? I would only request an individual to continue investing, right? One thing we need to understand is that we are investing over here. We are not trading. So we shouldn't be expecting a profit, or we shouldn't be expecting any kind of result, a quantitative result in 1 week, 2 week, or even a matter of 1 year, right? It's very important that we take. Okay, guys, the meeting will end in 10 minutes. Can we exit and join again?
So we will do that.
Okay. Yeah, I'll just request everyone to join again. Thank you.